Ladies and gentlemen, good day and welcome to H2 FY25 conference call to discuss operational and financial performance for Rajshree Polypack Limited. As a reminder, all participant lines will be in listen mode only and there will be an opportunity for you to ask questions. Please note that this conference is being recorded. Today we have with us Mr. Ram Sarup Thad, Chairman and Managing Director, and Mr. Sunil Sharma, the CFO. I will now hand over the call to management for their opening remarks, after which we will open the floor for questions. Thank you and over to you, Ram Sarup sir.
Good evening, everyone. Welcome to Rajshree Polypack Limited Financial Year 2024-25 and Q4 FY25 earning call. Thank you for taking the time to join us today. I trust you have had the opportunity to go through the investor presentation, which offers a detailed overview of our quarterly and annual performance. For the financial year 25, we have crossed the 300 crore milestone in revenue for the first time, reporting rupees 329.7 crores, an increase of 20.17% over financial year 24's revenue of 274.39 crores. EBITDA for the year improved by 26.12% from rupees 36.71 crores in financial year 24 to rupees 46.3 crores in financial year 25, with EBITDA margins improving to 14.04% as compared to 13.38% for previous year. PAT margins rose from 3.35% in the previous fiscal to 4.38% in FY25, with profit after tax amounting to rupees 14.46 crores for the financial year as compared to rupees 9.19 crores for previous year. For the fourth quarter of FY25, we recorded operational revenue of 90.05 crores, reflecting a 29.82% year-on-year growth. On a sequential basis, this represents 23.8% increase over Q3 FY25. EBITDA for Q4 FY25 stood at rupees 12.32 crores, up from 9.36 crores in Q4 FY24, a year-on-year growth of 31.61%. Compared to Q3 FY25, EBITDA grew by 36.06%. EBITDA margins remain stable at 13.68% during the quarter. Profit after tax for the quarter saw a substantial increase with a year-on-year growth of 78.8% and a quarter-on-quarter increase of 113%. Export revenues for Q4 FY25 stood at rupees 19.955 crores, contributing a 21.7% of the total quarterly revenue, our highest export contribution till date. Overall export revenue went up by 27.53% to rupees 53.87 crores for the year as compared to 42.24 crores for the previous year. We anticipate continued momentum in our international presence, supported by participation in global exhibitions such as NRA USA, Gulf Food Delhi, and events in Australia and Russia. These platforms are helping us deepen client engagement and broaden our reach in both domestic and international markets. In terms of product performance, our injection molding volumes increased significantly from 1420 metric ton in FY24 to 2654 metric ton in FY25, now contributing around 12.8% of our annual revenue. The significant growth was driven by export demand from institutional customers. We expect the demand of injection molding products to further grow and accordingly adding more capacity on toll manufacturing basis. The revenue from thermoform packaging product has also seen sustained growth from rupees 177.24 crores in FY24 to 194.39 crores in FY25, thereby growing by almost 9.7% over the last year. At the same time, the sheet sale grew by 29.96% from rupees 65 crores in FY24 to 84.5 crores in FY25. In response to rising demand, we have enhanced our manufacturing capacities of extrusion, thermoforming, and injection molding during the year. Despite the capacity expansion, utilization levels have remained strong across all verticals, ranging from 75 to 96%. We expect the growth momentum to continue, and using the ongoing financial year as year of consolidation, where the focus is on enhancing profitability while ensuring minimum capital investment and optimal utilization of available capabilities. This is an important move considering the fact that we have over the last 5 years have been constantly invested in building capacities, which has impacted profitability of the company. At the same time, we shall also be working on reducing borrowings by deploying the surplus cash flow in reduction of working capital limits. This will help us reducing overall interest costs, thereby further bolstering the profitability. Our joint venture, Olive Ecopack, has started picking up pace gradually and is shaping up in steady manner. The company has launched over 150 SKUs in last financial year and has generated revenue of 16.38 crore in FY25, of which 8.91 crore was generated in Q4 FY25. The overall EBITDA loss for Olive stood at rupees 8.37 crore for FY25. In case of Q4 FY25, the EBITDA loss was 1.14 crores, a significant improvement in the EBITDA loss from 6.28 crores for Q3 FY25. The company also incurred total loss of rupees 22.63 crores for the financial year 25, of which 5.52 crore was incurred during Q4 FY25. With constant marketing initiatives, including participation in global exhibitions, the products of the company have garnered good response from both general market and institutional customers. The demand momentum is picking up with product trials and institutional customer audits of manufacturing units, and we are working on strong customer pipeline. Even in export markets, there is a significant momentum for Olive product range, with exports starting to Middle East, UK, and USA markets. We are further working on adding more customers and getting more orders from the customers to whom we have already made the initial supplies. And we hope that these markets will be giving us a significant demand in coming months. I'm proud to share that Olive Ecopack is India's first vertically integrated facility dedicated to the manufacturing of sustainable packaging solution. At Olive, we source base paper and carry out the PE lamination and aqueous coating, followed by conversion into finished packaging products, all under one roof. Our facility boasts an installed capacity of 27,000 metric ton per annum for coating and 15,000 metric ton per annum for the production of packaging products, enabling us to maintain end-to-end quality of the product and control and drive eco-friendly innovation to scale. The joint venture is a meaningful contribution to our broader sustainable packaging initiatives. The total capital investment in Olive has been rupees 131.22 crores till 31st March 25, which has been funded by term loan of rupees 84.76 crore and balance of rupees 46.46 through promoter contribution from both joint venture partners. We have invested a sum of rupees 41.02 crore by mix of equity and loans till 31st March 25. Our current focus is on scaling both the production and scales of our products, with no significant capital expenditure planned for Olive in the ongoing financial year. As a joint venture partners, we anticipate investing no more than rupees 5 crore in the company for the financial year FY26. This infusion is intended to support Olive's operation until it generates sufficient internal cash flow to independently meet its liabilities and operational expenses. This concludes the business update from our side. We now welcome any questions you may have. All those who wish to ask a question may use the option of raise hand. In the reactions tab, you can use the option of raise hand. Anyone who wish to ask a question may use the option of raise hand. Kunal, can you unmute
Yes,
Yeah.
sir. We will take a first question from Mr. Ajay.
Yeah,
Good
sir.
afternoon, Ajay.
Yeah, am I audible to you, sir?
Yeah, very much. Good afternoon.
Yeah. Sir, thanks for the opportunity, and congratulations for this good set of numbers. Sir,
Thank
my
you.
question was basically just I'll start with the basic things like this until last, Q2, half year FY25. You guys are regular in doing the con calls and giving investor presentation, but suddenly Q3 we didn't get the investor presentation. Neither there was a con call. And this time also, okay, Concall, investor presentation is uploaded, but Concall came very late. Why is that suddenly there is a change in the, you were very regular earlier, but now suddenly there is a sort of a delay in doing this?
Yeah. In Q3, we actually, we were, as a management, were traveling, and then I had some health issues, so it got little delayed. So we thought we'll do it at the end of the Q4, which also completes the financial year. And we were facing some technical issues with the agencies who organized the con call. So finally, we found this solution of doing through this Zoom. And now, since we'll be doing this on the Zoom, we'll be like doing it in a timely manner in future.
Okay. So please ensure that you're doing it a little earlier as soon as the results are given.
Yes. Of course.
Yeah, sir. Coming to the business, sir, this JV, what I was like, we know Rajshree Polypack as a company, the clients and all that, like it's you're very marquee clients in your kitty. But what is the JV partner bringing onto the table? Like Rajesh Gandhi, he seems to be an individual, right? What kind of contribution is he bringing to the table? And second, looking at the products which Rajshree Polypack, the JV has been created, the Olive EcoPack products. But these products, looks like even a small SME can do it, right? These are very, very basic paper cups and also. What technicality? How do we differentiate ourselves from others in the segment?
Yeah. So I'll ask, we'll come up with the first question of what the other JV partner is contributing. Basically, the other JV partner is also into manufacturing of plastic packaging. And he also runs and owns a company which has an individual turnover of 200 crore plus.
Okay.
As informed earlier also, they have a distribution in the general market, or they have a distribution network across India, and they have almost more than 200 distributors.
Okay.
So they are helping in bringing the sale from that segment of the market.
Okay.
Now in Olive, the USP for us is that all the processes are done in-house under one roof.
Okay.
What you have mentioned, that cups can be manufactured, but it may be only one or two size which an SME can do. But doing end-to-end, right from coating and then converting into various products and producing 150 SKUs under one roof, it may look like a normal cup. But if you might have read in news, in US, Starbucks was sued for 500 million for a leakage in a hot coffee.
Okay.
So if you have to go for export as a segment, you like they will not buy cups from any organization which doesn't have a complete infrastructure to give a dedicated quality and service.
Okay.
So it looks like a normal cup, but it's a very critical product. And 35 to 40% of our revenue we are looking from exports. And as I mentioned, we have already started exports to UK, US, and Middle East. We recently participated in one of the big exhibitions in May in US. The response has been very encouraging. And we are hoping that in next 1 quarter, we should have big numbers coming from US markets.
Okay, sir. So already 2.5 months. It's almost going to be first quarter, right? So how is this JV performance? Shaped up. How much sales? So far it has done. Can you give some color on that?
Yeah, we are looking at JV to do between 13 to 14 crores of sale in this particular quarter.
So that will be for the full company, or you'll be getting only 50% share of that, right? That's what.
Yeah. I'm talking about the company at the moment. If I look at the overall for the full year, I can give a visibility that we are looking at around 90 to 95 crores of revenue coming from Olive as an overall. And if we achieve that number, we will be break even at this number and we will be covering all our expenses right up to depreciation level.
Okay. And in accounting, are you showing the sales also along with the 50%? No, you're not doing that.
No,
right?
no, 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 no. Only profit and loss is being shown because it's a JV, it's not a subsidiary.
Okay. Okay. So this accounting practice will be continuing next year. I mean, FY26 also. I mean,
Yeah.
this year also.
Yeah.
Okay. And so 90 crores for full year. So how, I mean, for the entire business to generate meaningful revenue, how long will it take, sir? I mean, another 2 years is what you're seeing? Or,
for this year, we are talking 90 crores and 26, 27, we are looking at 150 odd crores. And third year, we look at reaching the full scale, which has been the range of 210 to 220 crore, which is the full potential of the facility.
And the EBITDA will be better than the current level, or?
See, at 210-20 level, we'll definitely be at 16-17%. Yeah.
Okay. And sir, okay. Then regarding borrowings, I mean, what is your plan on the long-term debt? Are you planning to bring it down substantially? Like I think 58 crores or so you're having long-term debt, right?
Yeah. So as mentioned now, like we for 1.5 year, 2 year, will focus on reducing the debts, both on the term loan as well as on the CC limits. We want, our idea is to bring down this particular cost, at least for 2 years. We will consolidate the operations of Rajshree as well as Olive. Once we achieve that, then we will think of any further significant expansion. But we will be doing some small expansions. And in toll manufacturing mode, which is a asset line mode where we don't need to invest in machinery, there we will be doing the expansion and we'll be bringing the growth for the Rajshree at 15-20% per annum.
Okay, so 15-20% for standalone and another maybe 50 crores from the JV share. That's what roughly.
Yeah.
But so the growth projections are really good. But my point is, like, promoter selling, I mean, the shareholding has been continuously coming down for the last many quarters. And if you see,
no. In last quarter we have bought shares.
It has slightly gone up, but if you see, I think December or so, I mean, last.
No, we bought some shares in last quarter.
But there has been a little bit, I mean, from 50s it has come down to 40, 45. So I was wondering why, despite, I mean, your JV is.
No, it is at 43-44%.
It was in the 52.48 range actually.
We have not sold, but due to preferential issue, it got diluted.
Okay, there's no share asset selling from.
No. It was due to preferential issue and warrants which got due, it got diluted. We have not sold anything.
Okay. Sir, and regarding dividends, I mean, this year you've not declared any dividend, right? I mean,
this year we will hold. Next year we'll definitely look at giving some dividends.
The cash flows are also decent only, so I was wondering any specific reason why this dividend has been put on hold. Any?
Like only thing is, like, since we have been investing and looking to grow the business for the company, so now since we have taken a decision to keep a hold on any further investment, we definitely expect the cash flows to improve further within a year's time, and next year we'll look at definitely announcing the dividends.
And sir, regarding this Odisha expansions, like what is the update? You're proceeding with that? Or?
We are deferring it for 12 to 15 months. As I said, we will consolidate first with whatever is on our hands. Okay,
understood. Sir, regarding one more small thing, like most of the time we are seeing even small orders getting like published in the exchanges, like even up 50 lakh, 25 lakh. So are they new customers that you are trying to say, or is it like normal?
As per the exchange norm, they say any order which is 2% of your profit, you have to declare. There is a legal compliance something.
Even if it's an existing customer, still you will.
You have to declare. Yeah. If the order value is one of PO is beyond 2% of the your net profit.
Yeah. Okay, sir. Understood. Okay, sir. Thank you so much, sir, for taking all the questions, and congratulations for the coming in. Yeah.
Thank you.
Hello. If anyone question, please raise reaction hand.
I'd like to remind anyone who wish to ask a question may use the option of raise hand, which is available in the reactions tab. Or can make a request through a chat. The operator will unmute.
Next
Can you
question
unmute?
from Mr. Roman.
Hello. Am I audible?
Yeah, Raman. Good afternoon, Mr. Raman.
Good afternoon, sir. So I have 3 questions. So first, I would like to have the FY25 revenue contribution from Olive joint venture and the capacity utilization that we ended with the joint venture.
So Olive revenue for FY25 was 16.38 crores.
Okay.
In Q4, it was 8.91 crores.
Okay.
And this is for FY24, this is 14 to 15% of the capacity from the conversion division.
I believe it is FY25, sir.
Yeah, FY25, Q4.
Okay. So total revenue was 16.8 crore, right? For total
16.38 crores. Yeah. And in Q4, it was 8.91 crores.
Okay. And how are the management is expecting for this financial year, current financial year, to end the revenue?
Yeah, we are expecting around 90 crores of revenue in this financial year from Olive. And at this particular revenue, we are looking to break even with all the expenditures right up to depreciation level.
So, are you expecting any contribution in the profit before tax level in a console basis?
Not for this financial year, next financial year.
Okay, noted. And also, I saw the filing that you are expanding the injection molding capacity. So the quantum of the capacity was not given in terms of the monetary investment. So can you give any ballpark number of how many crores will be invested in the injection molding in the Daman facility?
Injection molding is through toll manufacturing agreement. So we don't invest into machines. We only invest into molds where the investment will not be more than 1 to 1.5 crores in the molds.
Okay, noted. Also, I wanted to ask, this is from the Q3 part, third quarter of last financial year. Margins were somewhat depressed and went up to 7% as compared to 12 to 13%. So, any major reason for that particular decline in third quarter?
Generally, Q3 is weak for us if you have seen the company performance over the years. So generally, Q3 is always weak for us. I will not say that. And if there is any particular specific number, I can dig into that and I can revert back to you at a later date.
Okay, noted, sir. Last question from my side, that supposing that Olive joint venture breaks even this year and we will be expecting some contribution in next financial year. So do you have any target for a quantum of contribution to the profit before tax level from that joint venture?
We are looking at EBITDA level of 16% at a revenue of 210 crore when it will be fully operational. So if once it reaches that level, we overall profit, we will be looking at 16 to 18 crores. And out of that, 50% will be for Rajshree. So we can expect around 8 to 9 crores of profit coming from Olive once it is fully operational.
And you are extrapolating it to be contributing in FY27, right?
Yeah.
Okay, noted. Thank you. That will be all. Thank you.
Anyone who wish to ask a question may use the option of raise hand. Kunal, can you unmute Mr. Raman?
Yes, sir.
Hi, sir. Actually, I have a question on the other partner of joint venture. So, can you put some light on the contribution that the other joint venture partner gives in the operation?
Yeah, I replied to Mr. Augustine previously. See, the other joint partner also is into manufacturing of plastic packaging, and he runs a company with a turnover of 200 crore plus. So their major sales is from distribution network, and for the olive, they take care of all the sales in the general market distribution and getting customers from that particular segment.
Okay, so like what are the expenses part that Rajshree Polypack gets in the balance sheet or the profit and loss statement? Like the manpower or the supposing if we are like distribution handling or any employee cost that we will handle.
No. See, Olive has its own team of sale, distribution, and operation.
Okay.
Rajshree has nothing to do. There are employees on Olive payroll, and all the expenditures which are being done for Olive are maintained there. Like, so Rajshree has nothing to do with any expenditures of Olive.
Okay, sir, noted. And lastly, sir, if you I was late to the call, so have you shared any particular set of guidance that you are targeting for this financial and next financial in the top line and bottom line?
For Rajshree, we are looking at around 365 to 370 crores of revenue with roughly 15% of EBITDA margin, and roughly a PAT we are looking of around 19 to 20 crores.
So I am seeing key margins have been hovered around 11 to 13%, and you are saying ki we are expecting almost 14 to 15% margins. So can you like share where that kick in comes from, the improvement in margin side?
See, EBITDA for this year was also at 14.04%. So with the scale in the operation, we definitely look at improving further 100 basis point in the EBITDA numbers. And with the scale in the operations and with this increased revenue, all other fixed expenses will remain constant. So we definitely look at improving the numbers at the bottom line.
Also, you suggested that all the fixed costs will remain same. So are you planning to repay the borrowings because it has incrementally gone up in last financial year as compared to previous year?
Yeah. I mentioned before also that for the term loan, there is a repayment of around 6 to 7 crores per annum, which goes as per the payment schedule. And since we'll not be doing any further major investment, so whatever cash flows that will be generated will be used in reducing the cash credit limits utilization. And with that, we look in next 2 years to reducing the debt significantly.
Okay, sir. Noted. Thank you so much, sir. All the best.
Thank you.
Any participant wish to ask any question can raise hand. As there are no questions, Mahipal sir, over to you.
Thank you very much. As there are no further questions, I would like to hand the conference over to the management for the closing comments. Thank you, and over to you, sir.
Thank you for your thoughtful questions and joining us today. We appreciate your continued interest and support. Wishing you a healthy and a productive year ahead.